Hello traders and welcome back to Explain the Charts. Today is November 27th, 2025, and we're taking a deep dive into the Nasdaq 100 ETF, QQQ. First, we'll sift through the latest news and headlines driving the market, and then we will jump straight into the charts to see how that news is translating into price action. Let's get started with the current events. The market sentiment is currently being pulled in two directions by the powerful narrative of artificial intelligence. On one hand, we're seeing incredible strength in AI-related stocks, with companies like Google and Tesla seeing significant buying pressure. Reports of Alphabet's new Gemini 3 AI model are creating a huge buzz, and Elon Musk's boasts about Tesla's own AI chip development have sent that stock soaring. This has been a primary driver of the Nasdaq's recent strength and resilience. However, this AI enthusiasm is also creating pockets of intense volatility. Recent news suggests Meta might be considering Alphabet's AI chips, which caused Nvidia's stock to tank almost 7% recently. This highlights a potential sector rotation and growing competition in the chip space, which is a critical component of the Nasdaq index. Beyond the immediate tech sphere, broader market news is also mixed. We're hearing about progress in Ukraine-Russia peace talks, which is pressuring defense stocks, and potential extensions of ACA subsidies are boosting certain healthcare names. Economic data is pointing to a slowing labor market, which the market often interprets as bullish, hoping it will lead to interest rate cuts. However, the 10-year Treasury yield has been falling, which typically supports growth stocks like those in the Nasdaq. The main takeaway from the news is that while the AI-driven rally has been strong, the recent hit to a market leader like Nvidia shows there are underlying vulnerabilities and potential for sharp, sudden reversals. Now, let's pull up the daily chart for QQQ to see the bigger picture. Looking at the past year and a half, we can clearly see a strong long-term uptrend, but it has been punctuated by periods of intense volatility and significant pullbacks. The most dramatic of these was the sharp correction back in April of this year, which we'll zoom in on shortly. We established a major peak in late October around the $637 level, which stands as the key long-term resistance for bulls to overcome. More recently, we saw a high just yesterday, November 26th, at $616.19. On the support side, the low from the November 20th sell-off at $585 is now a critical level to watch. A break below that would suggest this recent bounce is failing. Looking further back, the lows in the $400 to $420 range from the April sell-off represent the most significant long-term support zone on this chart. To understand how quickly this market can move, let's isolate that period from March to April of 2025. As you can see, the price plummeted from around $540 all the way down to a low of about $402 in just over a month. Notice the massive increase in volume on these red days, particularly on April 4th and 7th. This signifies intense selling pressure and panic. The bottom was marked by a huge reversal candle on April 9th, which opened lower but closed near the session's high, indicating that buyers stepped in aggressively at those lower prices. This was a classic capitulation event that washed out weak hands and set the stage for the subsequent recovery. Now, let's zoom back into the more recent action, from September to today. We saw a strong rally into September that peaked around the $600 psychological level, which then became resistance. The price pulled back and eventually broke through it, pushing up towards $610 before the sharp drop on November 20th. This massive red candle right here is a perfect example of news translating directly into price action. It dropped over 4% in a single day on extremely high volume, which aligns perfectly with the negative news surrounding Nvidia that we discussed earlier. That day's low, around $585, established a critical new support level. What's incredibly bullish, however, is how the market responded. Buyers immediately stepped in, and we've seen a powerful V-shaped recovery over the last 4 trading sessions, culminating in yesterday's new high. This demonstrates a strong appetite for risk and a willingness to buy the dip in this tech-heavy index. Let's switch over to the 1-hour chart to get a closer look at this recent recovery. From the low on November 21st, you can see a clear and structured uptrend. We are seeing a pattern of higher highs and higher lows, which is the definition of a healthy short-term trend. Yesterday's session pushed to a new high of $616.19 before pulling back slightly into the close. This area around $610 to $612 now acts as the nearest term support for this uptrend. The price is currently consolidating near its recent peak, suggesting the market is pausing to digest the recent gains. Finally, let's drill down to the 15-minute chart to see what's happening in the early hours of today's session. Price action is very tight, oscillating in a narrow range around the $615 level. This indicates indecision as traders await the market open for more direction. This tight consolidation is like a coiled spring. A break above yesterday's high could trigger another leg up, while a move below the pre-market lows could invite selling pressure. Watch for an increase in volume at the opening bell to signal the market's intended direction for the day. So, let's recap the key takeaways and potential scenarios. Your key resistance levels to watch are yesterday's high at $616.19, followed by the psychological level of $620. The ultimate bullish target remains the prior all-time high near $637. On the downside, your immediate support is the $610 to $612 zone. Below that, the most critical level is the November 20th low at $585. The bullish case, which I see as having about a 60% probability, is that the dip buyers remain in control, fueled by the broader AI narrative. A sustained break above $616, especially on strong volume, would reinforce this and open the door for a continued move higher. The bearish case, with a 40% probability, hinges on the idea that the November 20th sell-off was a significant warning shot. If we fail to hold above $616 and break below short-term support at $610, it could signal a retest of the critical $585 level. A break of that support would likely mean a deeper correction is underway. Going forward, keep a close eye on volume and any breaking news from the mega-cap tech companies, as they have an outsized influence on this index. This has been your breakdown of QQQ. Remember, this is not financial advice and is for educational purposes only. Always conduct your own research and due diligence before making any investment decisions.